Thanks everyone for joining us today for the fourth AASB Dialogue Series of the year. I'm Al from the AASB, and today we will explore some of the challenges and opportunities for external reporting for the not-for-profit sector entities. And not-for-profit sector reporting has always been an important part of the AASB work program. As you may be aware of, AASB is actually currently developing a proposal of the simplified accounting requirements for smaller not-for-profit entities, which we will provide more detail later in the session today. And today, today's webinar will be chaired by Associate Professor Ralph Kober from the Monash University. Ralph's research focuses predominantly on the not-for-profit sector and management control system. So some of his recent publications have focused on how management control systems can help charities navigate the COVID-19 crisis and how charities use accounting information for decision-making during the COVID-19 crisis. Ralph's research on the impact of COVID-19 on charities has been recognized with the 2021 Chartered Institute of Management Accountants Research Excellence Award. And Ralph's research has been published in a variety of accounting, education, and psychology journals, including Management Accounting Research, Accounting, Auditing, and Accountability Journal, Accounting and Business Research, and to name a few. Ralph has also been actively involved with both academic and professional associations, have previously held various positions of responsibilities across numerous associations, including being the vice president of the New Zealand branch of CPA Australia, and also a member of the AASB Academic Advisory Panel. So without further ado, I will now hand over to Ralph to start today's webinar.
Thank you very much, Al. To start things off, it gives me a great privilege to do the acknowledgement of country. So we would like to acknowledge the traditional custodians on the lands we meet on today and recognise their ongoing connection to land, water and community. Here in Melbourne, which is traditionally called Naarm, it's the Wurundjeri people, and as you all know, AASB is based here in Melbourne. So records of European colonialists highlight that Indigenous Australians were great storytellers and communicators. They came together in large gatherings to share knowledge, a tradition that we are continuing today in this webinar of sharing knowledge. So we pay our respects to all First Australians and their elders, past and present and emerging. Virtual attendees that are based elsewhere, so we also pay our respects to traditional owners of the lands from wherever you are joining us. And we welcome especially any Indigenous people who are joining us in this webinar. So now the first thing is we'll be starting off with a presentation from Professor David Gilchrist. So Professor David Gilchrist is a chartered accountant and holds a PhD in economic history from the University of Notre Dame. He is currently Professor of Accounting and convener of the Centre of Public Value at the University of Western Australia, where he is also a chief investigator and the convener of the Australian Not-for-Profit Accounting Standards Project. David is a member of the AASB Academic Advisory Panel and a country member of the Practitioner Advisory Group for International Financial Reporting of Non-Profit Organisations, in which he is developing accounting standards and guidance for the sector globally. Previously, David was the Assistant Auditor General in Western Australia and was a member of the ACNC Advisory Board and has taught accounting and finance at the London School of Economics and Portsmouth University in the UK, as well as within Australia at Curtin University, Notre Dame and Edith Cowan. He is a Foundation Director of the Curtin Not-for-Profit Initiative for 5 years and is currently a visiting professor and Chief Research Investigator in Not-for-Profit Studies at the NFPO Research Centre, Hebei Geo University, People's Republic of China. A visiting fellow in the Department of Accounting, Erlangga University, Indonesia, and visiting professor at Queensland University of Technology. David has undertaken significant research related to sustainability, and he has written over 100 industry reports, including reports focused on the NDIS sustainability for disability service providers, and published many articles related to this area, including the NDIS white paper, 6 years and counting, the Australian Disability System and the NDIS, and various green papers on this matter. David has written and edited or contributed to 10 books, and he was appointed a Fellow of the West Australian Parliament in 2021. It gives me great pleasure now to hand over to David for the keynote presentation.
Thank you very much, Ralph, for that very generous presentation. It does make me feel old, though, I must admit, because the older you get, the longer your CV gets, I think is the lesson here. Look, I have 15 minutes, and so I'm really pleased that my interlocutors on this panel are also very well established and great contributors to this, and as well as other subjects relevant to the not-for-profit and charitable sector. And so I'm going to skip through relatively quickly some key things that our research and I guess anecdotally too, things that I've found to be fairly important from the point of view of not-for-profit accounting standards development and the trajectory of that going forward. But no doubt I'll leave out things because I do have a brief amount of time, and I'll look forward to discussing some of those things that my colleagues on the panel will pick up in due course. The other thing I would say at this point is that this discussion has been really informed by the Australian Non-Profit Accounting Standards Research Program, a program of research that involves a number of universities, as you can see on the screen now, and is also supported very significantly by the Australian Accounting Standards Board, CPA Australia and Chartered Accountants Australia and New Zealand. And I'm very grateful for the support that I know a number of colleagues watching this seminar are also providing. So thank you all for that. In terms of my agenda, I want to, I guess, discuss a couple of examples of projects, or give you at least a little bit of an idea of some of the things that we've done relatively recently, in which we can then talk about the kinds of findings under the headings of challenges and opportunities as I see them. And again, these will be a very potted and very quick run through. So I'm sure our colleagues and also people listening in with questions will identify and find other things that can be added to this process as well. But in the short term, I think there's a number of often cited key issues around reporting and not-for-profit organisations generally. And acknowledging, say, Benjamin Murray's role on this panel and the role of Indigenous corporations, I acknowledge that there are a number of different types of organisations that come under the heading of charities and not-for-profits. And so I'm speaking very, very generally, and hopefully we'll get some specifics that some of our colleagues would also identify. But generally speaking, I think the often cited key issues, or the very significant issues that are waxed lyrical on from time to time, include the idea of general purpose financial reports versus special purpose financial reports, and some myths, in my view anyway, around special purpose financial reporting and the extent to which that might be more efficient or cheaper for organisations. The cost versus benefit issue, I think, is also an enduring issue, and I've got some comments around that in a couple of slides' time you'll be excited to hear. But at the end of the day, of course, cost versus benefit is an incredibly important calculus for all of us to consider, to make sure that the outcome achieved or the benefit created from accounting standards is going to be far greater than the cost involved in implementing them. Decision usefulness is also a really critical issue, and I will speak to a decision usefulness project that we've undertaken in part of the Australian program. But at the end of the day, of course, we need to understand what the purpose of these financial reports are and whether or not they actually meet the needs of those users in terms of the types of decisions that they might make from time to time. I think the other thing that is often talked about, but perhaps not necessarily in the context of accounting standards, is the government not-for-profit nexus in Australia. As we all know, many, many human services are funded or procured in some way by state, Commonwealth and territory governments. And we often think about accountability of not-for-profits and charities, if you like, in an isolated way. We talk about the charities' accountability as opposed to thinking about perhaps the systemic accountability that might be relevant. Now, I know this is a little bit of a tangent or a step beyond accounting standards in a technical sense, but I think it is an important part of the context in terms of being able to understand what the decision usefulness characterises or attributes of accounting standards might be, to be able to help us to understand that government not-for-profit nexus. And then I think there's the issue, and it's a perplexing and enduring issue for many of us, as to actually identifying who the users of these reports are. And I have got a couple of comments on that in a couple of slides' time as well. Suffice to say at this point, of course, that we often read into or consider the user list to be the typical user list that we might consider relevant to commerce or even relevant to public sector financial reporting. And at one level, we can't have really any...
David,
yes?
only your heading is showing. Your bullet points aren't showing.
Oh, I'm sorry. Thank you. Trying to work on a few screens. So there you go. So I apologise for that. Thank you, Ralph. So the user identity and what decisions they take at one level can be assumed, I think. I think we can assume that certain people will be users, but at another level, there are some interesting findings from some of our research that indicate perhaps users that we didn't expect to find actually exist, or at least consider themselves users in the technical sense of that term. And then, of course, the final point is, well, how is information provided? And while I won't speak to this particular point, I think it is an important point for the panel and for our discussion. And particularly, I think, given that anecdotally, there is a lot of evidence where organisations are putting very high-level summaries on websites and so on, and not actually distributing financial reports in their entirety. So they might be producing general-purpose financial reports, but not actually distributing those reports for a number of reasons, which I'm sure we can discuss in due course. Okay, so to that extent, the projects that have been informing the specific comments that I'll make today consist of three elements. One is a decision usefulness project that I undertook with Andrew West and Yu Zhang at Queensland University of Technology. One is an asset valuation project, which is part of our auditing program, research program with Prana Agrawal at UWA and VN Chu at Newcastle University. That asset valuation project is still underway. And an earnings management project where we looked at the earnings management proclivities of disability service organisations in Australia. And as you can see, I undertook that with Dane Etheridge at Curtin and Frank Liu, my colleague here at the University of Western Australia. Just so that you're aware, those papers are all available on AASB website. So one is available on the website itself, and one at the AASB SSRN website, which is the social sciences website. And these slides are able to be distributed. So I'd be very happy for people to take them and perhaps access the papers through those sites. So starting off, I guess, with the negatives, what are the major challenges and direct reporting issues that have come out of this research? And I think personally reinforced by anecdotal conversations and other research that's coming in relation to the not-for-profit and charitable sector reporting internationally. And first and foremost, it won't surprise anyone, I don't think, that is attending this session today to see financial literacy as the keynote issue for the sector. Arguably, financial literacy is probably challenging in other sectors as well. So I don't think that this is necessarily germane or only relevant to the not-for-profit and charitable sector. But what I would say is that there's two fundamental things that have come out of our studies that I think are noteworthy at this point. The first is that financial literacy challenges many of those in the sector and many of those dealing with the sector. And the often used refrain or response to financial literacy problems is that we need to simplify the accounting process and reporting process in order, if you like, to make sure that the accounts are simple enough for people that don't have financial literacy in their background to be able to respond. I guess one of the things that our research is highlighting, and I think is a really important thing, perhaps even to discuss in the question time or what have you, is the fact that we need to respond to the challenge of raising the bar to make sure that the accounting standards and the reports themselves are delivering information that is useful and raising the capacity of the sector to meet that need. So in other words, not over-egging the simplification so that we're in a position where the financial reports actually mean nothing at the end of the day. Now, I know that that's a long-term issue, and I think there's room for a long-term plan in terms of how we might increase the knowledge of financial literacy among the sector and among those stakeholders. But I think it's an important issue for us to think about. How do we balance simplification against raising the standard, if you like, or the capacity? The second element there that's really interesting is that out of our decision usefulness work, we identified clearly that directors of not-for-profit and charitable corporations see themselves as users of financial reports. Now, this wasn't universal, but it was certainly a very significant majority of those users, or rather those directors, that considered themselves to be users. And that, of course, has many ramifications, not just for accounting standards and financial reporting, but across our conceptions of governance, where we would argue that directors of a corporation actually publish the report that we are hearing that they believe that they're users or consumers of. And I think that's a really important consideration.
5-minute warning, David.
Thank you very much. The next point is proportionality. Cost versus benefit is a really important issue, and valuation, particularly in the case of administered and controlled assets. So those assets are administered where they're actually provided by a philanthropist or a government for a particular purpose rather, and there are very significant difficulties in terms of realising that asset or being able to use that asset for other activities that you might undertake. In other words, they're assets that meet the definition under the accounting standards as assets, but don't necessarily have the solvency or operational view that untutored reviewers of the balance sheet might read into those asset values. And then the final point that I think is important is around some of the non-profit myths, and particularly the issue that was almost universally agreed with, that not-for-profits and charities need to talk about having surpluses, not profits, which I think is a real problem, and I'm happy to go through into that more deeply in our conversation. But at the end of the day, there was clearly an issue that surplus needs to be talked about rather than profit, but more importantly, that everyone seemed to be concerned about the fact that profits and reserves existing on the profit and loss or the balance sheet makes it very difficult for them to raise funds, because philanthropists and others don't necessarily see that there is a need for resourcing those organisations that are profitable or that have funding capacity. So the major challenges that came out of all of this research, and again, I think anecdotally are really important considerations, included lack of governance experience, which again is probably not new to many, volunteer directors with little industry knowledge. In other words, directors are well qualified in their substantive industries, but don't necessarily have a deep understanding of the industry in which the organisation operates for which they volunteer. And similarly, retired directors have reported that they're just not up to date and understanding what the changes are or what things are happening, not just in accounting and reporting, but more across the governance board. The lack of administrative resources, again, is also something that people would be aware of, and regulatory compliance is identified as a priority in relation to financial reporting, as opposed to communicating to other stakeholders. There's also the preponderance of many different acquittal styles and different people and organisations that these charities have to acquit to, which means that the funding and reporting process is much more complex than perhaps it needs to be. And then, of course, tick the box governance is something that many people have also talked about. And you can see a statement there from one of our projects where a participant indicated that they're on autopilot, to be honest, some sort of a sort of rinse and repeat from last year, from every previous year. And I think that's quite an indictment in terms of the opportunity that's inherent in not-for-profit reporting and the realities that are achieved. So just very quickly, and I think I've got 2 minutes left, in terms of opportunities, I think it's really important to understand that in all of our research, we've had universal and unanimous support for financial reporting. No one has said this is too hard or we shouldn't be doing it. We've also had universal recognition of accountability of the board and accountability and transparency obligations of these organisations. So again, we're in waters that I think the sector thinks is a very important element. We also have the ACNC Standard Chart of Accounts. So we've got a backbone, if you like, of accounting uniformity and opportunity, particularly as all the states and territories in Australia have accepted that backbone as being a really important aspect. So I think we've got a step-off point, for want of a better phrase, in terms of being able to have the infrastructure to develop up our accounting standards and accounting reporting processes. There is an audience for increased financial literacy, and many people reported that they would like to have much better understanding. And so I think there's an opportunity in terms of not just tinkering or changing accounting standards, but also in educating around accounting standards to raise that bar, as I mentioned before. There's an audience also for removing some of the myths, particularly in relation to things like profit versus surplus and having cash reserves, and, if you like, educating those stakeholders. There's a need to think about government funder needs for financial reporting and the kinds of information they might have. The opportunity for uniformity in that is quite substantial. And I think the opportunity for experimentation is also substantial, given that this is such a small sector. Ralph, I've bolted through that very, very quickly. I think I've used up my 15 minutes. Thank you very much. And I'll hand back to you.
Okay, thank you very much, David, and spot on time.
Fantastic.
So what I'll do now is I'll be introducing the panel members. So what I'll be doing is I'll be introducing the panel members one by one and asking each person just to speak up to a maximum of 5 minutes, just on reflections on David's talk or any other issues they wish to raise. Could I also ask that while you're listening to these, if you have any questions related to David's presentation or anything that any of the panelists say, please type your questions into the Q&A. Because we will be opening up to questions. So it'd be great if we have some questions there ready to go. Okay, so Mel Yates is from the Australian Charities and Not-for-Profit Commission. Mel leads the collection of reporting from charities with a focus on reducing unnecessary regulation obligations and ensures the ACNC has sound corporate governance arrangements. Mel started his career with the ACNC in April 2016. Prior to this, Mel worked at the ATO for over a decade across compliance, internal policy and assurance, as well as operational financial management and government tax management roles. After graduating from university, Mel travelled and worked in England in social service finance roles. He began his career at a large professional services firm and has worked for the Victorian government in a finance role. Mel is currently ACNC Liaison to the Public Sector and Not-for-Profit Committee of CPA Australia, Victorian Division, and also a member of the Victorian branch of CPA Australia. Over to you, Mel.
Thank you, Ralph. Hello, everyone, and thank you, David, for your presentation. So just a couple of comments and observations that I make. In terms of the whole discussion around general purpose financial statements versus special purpose financial statements, I think it's really timely that we are discussing that. Obviously, with the work that the AASB are doing in terms of developing another potential tier of reporting, it does need to be reflected upon that special purpose financial statements are legislated within the ACNC framework. So it has been decided by Parliament that special purpose financial statements are acceptable and are fit for purpose for the charitable sector. So the road forward is going to be an interesting one, and I think it's really important that there is that dialogue and discussion about the needs of users, because obviously one of the ACNC's core mantras is the reduction of red tape where it's not necessary. And so if we're going to remove that ability for preparation of special purpose financial statements, if it is found that they're not fit for purpose, then we need to make sure that there is a proportionate, appropriate replacement introduced in their place. One of the things we have been doing, just going to your point around capability, is that we have been investing in a series of online courses specifically aimed at people who are supporting smaller charities or are thinking of joining the board of a charity, to basically give them some key information that is going to clarify what their obligations are and what their expectations are of being a board member. In terms of some of the other points you make, I do think it's really important that there needs to be narrative to accompany the financial statements. I think that's the key around some of those conversations relating to surplus reserves. There are reasons, very legitimate reasons, why some organisations need to build up reserves. And I think the narrative that goes along with the financial statements is the key to executing or prosecuting an argument as to why an organisation should have reserves. I think it's important that everyone sees the value in the preparation of financial statements. And just going to your last point in relation to the standard chart of accounts, I think looking forward, there's a huge opportunity to really build digital financial reporting based on the technology that we have available, which is also evolving. And that is going to be the way that charities can further reduce that regulatory burden by meeting their obligations without really doing anything. It could end up being a very sort of passive meeting of obligations that just happens in the background. So it's very exciting. So that's enough from me. I'll finish up there. Look forward to some questions. Thanks.
Thank you very much, Mel. The next panel member is Ben Murray. Ben is from the Office of the Registrar of Indigenous Corporations. Ben is a technical advisor to the Office of the Registrar of Indigenous Corporations, providing advice on financial reporting and assurance. Ben has extensive public sector experience in Indigenous affairs and Indigenous corporate governance across public policy and corporate support roles. He has a particular interest in the accessibility of accounting to Indigenous peoples. He is a member of Chartered Accountants Australia, New Zealand and CPA Australia, and a lawyer of the Supreme Court of the ACT. Ben.
Thank you, Ralph, and thank you, David, for your presentation. I think it would be unsurprising that the issues that face Indigenous people and Indigenous corporations in financial reporting are the precise issues that you've identified through your research. There really is, those issues are sort of the issues that our corporations face. What I would point out is that unlike Mel and the ACNC legislation that allows for special purpose financial reporting, the CATSI Act and the regulations made under the Act do away with the reporting entity concept and essentially prescribe that all Indigenous corporations must comply with the accounting standards, whether or not the corporation is or would be regarded as a reporting entity. And so over the years, all of our corporations, or most of our corporations, there are some that overlook that and prepare special purpose, but the bulk are in the habit of preparing general purpose financial reports. And so a transition to the AASB's new financial reporting framework for not-for-profits will probably be less troublesome for our corporations, hopefully, than it is for the wider not-for-profit sector. On some of the other things, one of the other reporting reliefs that we give is noting the economic dependency of many of our corporations on government funding and the high level of government funding that's received. We have an alternative reporting requirements for corporations that meet particular requirements, and that's predominantly more than 90% of yearly revenue derived by way of grants that require some acquittals back to government funders, and that the corporation is not required to prepare consolidated statements. Those corporations can then submit in the place of a financial report. They can submit the acquittal reports that they provide to the funders together with an extra profit or loss statement that covers any income and expenses that are not covered in the acquittal reports, together with a balance sheet. Now, while that's in place, I must say that without a sort of an agreed framework around it, the quality of the financial reporting is particularly difficult. And generally speaking, there are no notes. So trying to, compare corporations over the years and then with other corporations is very difficult. So we need to see that improved. The other point that I would make probably is around decision usefulness and stewardship. So for financial reporting, as with many of our corporations, notwithstanding the assets are provided to the corporation under funding agreements or the resources to acquire the assets are, in a sense, those corporations are holding the assets in trust for the community, perhaps not in a legal sense, but certainly sort of in a moral sense. So the idea that financial reports might be used, in a decision usefulness way that is sort of contemplated by the conceptual framework and the standards is probably something that, is not particularly relevant. And we would probably argue that stewardship would be a much better way to look at, the accountability that financial reporting should provide. Just one other comment I'll make is around financial literacy. Agree that is a real problem with our directors, the preparers of financial reports and the users of financial reports. The accounting standards itself are highly complex and technical. The financial reports, and particularly the notes to the reports, are very difficult to understand. Increasing financial literacy, I think, generally is a problem with the literacy and numeracy sort of deficiencies that are acknowledged within Indigenous communities. That will be additionally burdensome or an additional problem. I think the other thing that perhaps could be that's sometimes overlooked is the stigma that's attached to financial literacy and the willingness of people to acknowledge and to look to overcome that. Was there another comment that I probably wanted to make? Just that final point about motivation. Directors of not-for-profits, one of the key things is to have them motivated to acquire that level of literacy when most of them tend to want to rely on other experts, auditors, and those that prepare financial reports for them. So I'll stop there. Thank you.
Okay, thank you very much, Ben, for giving us that Indigenous perspective. The next person I'd like to hand over to is Ellie Norris. So Ellie is a PhD candidate with the Asia Pacific College of Business and Law and the College of Indigenous Futures, Education and the Arts at Charles Darwin University. Ellie is a qualified accountant, CPA and CGMA, and has degrees in international relations and economics from Stanford University and the University of Oxford. Ellie's career has spanned more than 13 years of experience in financial management and accounting, principally with the not-for-profit sector, including the role of finance manager for a large Indigenous corporation in Alice Springs. Her research interests include impact measurement, reporting and governance for social enterprise and not-for-profits. Over to you, Ellie.
Thanks, Ralph. And thank you so much, David, for the interesting presentation. I think my comments perhaps overlap with points that Mel and Ben have made already. But firstly, I kind of wanted to reflect on this point around financial literacy and narratives. And I feel from the research that I've been doing, which has been principally looking at Indigenous not-for-profits in Australia, looking at the opportunity to use narrative disclosures more effectively to communicate financial information to audiences who are not necessarily comfortable with the technical complexity that we know financial reports contain. And so, we know that many not-for-profits engage extensively in narrative reporting to explain their non-financial impacts, the services that they provide their communities, the activities that they perform, and often have quite sophisticated measures of performing and reporting, measuring and reporting against their performance. But in many cases, and I think this is a point that David made as well, financial information is not always distributed very well. And I think there is clearly a real disconnect within the users of reports within the not-for-profit sector between an interest in financial and in non-financial information. And so I would certainly like to see perhaps more thought being given to how standard setters and regulators and so on can perhaps try to encourage and support the better use of narrative disclosures to communicate financial information in a really kind of simple, plain English way that helps to inform users about financial results. I know there's been some research in Germany which has suggested that when not-for-profits include, charts and visuals and things to their reports, sometimes that can actually provide a misleading picture, and there's evidence that the charities obviously select the information that they present and they're not necessarily showing the full picture either. So clearly that work needs to be done to make sure that where narratives are being used, they are being used to transparently communicate information. But I do believe that's perhaps a way forward for organizations and users to engage more with financial reporting. I know that there's also been a comment or a question in the chat about service performance reporting, and perhaps linked to that, I just wanted to kind of make a very brief comment on that. Again, as I've mentioned, as we know, many not-for-profits are already very actively engaged in the space of measuring and reporting against their own performance, and so there are inherently, huge conflicts at play or complexities at play in terms of standardizing the provision of that sort of non-financial information. I don't want to get into that too much, but I did just want to make the comment about where that kind of information might be presented. And again, as I've said, and as David has mentioned in his presentation, there is an issue around financial reports, audited financial reports, not necessarily getting distributed widely. So, for example, in the research that I've done, I've found out of about 100 Aboriginal and Torres Strait Islander organizations, fewer than 1 in 6 were putting their financial reports on their website. And I think that really reflects, a sort of a lack of engagement with that information. But so if we are looking towards service performance reporting being part of that audited set of financial statements, I think we need to think carefully about how that information gets distributed to make sure it's not just getting tucked away. If we think that information is important, how do we make sure it doesn't just get tucked away, filed with the regulator, but not really distributed more widely with the users that we think would benefit from that information? I think those were the comments that I wanted to make, but yeah, thank you very much. Happy to answer any questions.
Thank you very much for that, Elliot, for your perspectives from your research. The final panel member I'd like to introduce is Isabelle Lefebvre. Apologies, I probably mispronounced your surname there. Isabelle has been at Deloitte for 34 years, the last 21 years as an external audit partner. She has commercial and pragmatic approach to issue resolution and has served a variety of clients ranging from multinationals, private clients, and not-for-profit. As a sector which she has a great passion for. She leads the not-for-profit audit group nationally for Deloitte, keeping their clients abreast of regulatory updates and industry trends, and leads the audit of some of Deloitte's iconic clients. She has served on not-for-profit boards for the last 20 years, including the French Australian Chamber of Commerce, Carey Baptist Grammar School, as chair of the Finance and Audit Committee for 9 years, and is a current member of Deloitte Foundation Board. Isabelle is a chartered accountant and a registered company auditor. Over to you now, Isabelle, to hear from a practitioner's perspective.
Thank you, Ralph and David, for that presentation. So in my role as external auditor, I have direct insights in some of the financial reporting challenge in the non-for-profit space that David referred to in his presentation. So first, what I observe is that structurally, the non-for-profit sector is under-resourced compared to the for-profit sector. They typically focus their resource on getting the best outcome for the cause they support. But I do note that generally the finance staff, key management, and the board, who are usually volunteers, are very eager to comply and follow best practice, but they are time and resource poor compared to the for-profit sector. So any change such as a change in the financial reporting framework, can be quite challenging for the sector without the right support to guide them through either via these seminars or through their advisors. So I've wanted to talk about probably two of the specific challenges I've seen that the non-for-profit are currently facing. One is the reporting framework, and two are some of the waves of the ACNC and AASB wave which are coming. So first is the reporting framework. What is the right reporting framework for a non-for-profit? Which tier do they fall under? What is the interlink between the ACNC tiering, which is large, medium, and small based on a revenue scale, and the AASB, which uses a tier system 1, 2, 3, which is not revenue based. So that can be quite confusing when we approach clients and so that they understand where they fall, and they usually rely a lot on their advisors to do that. The second aspect is all those waves on ACNC and AASB change, and I can think of 5 I just wanted to highlight briefly. So the removal of the reduced disclosure regime for the general purpose financial report. The reduced disclosure regime is gone as of June, and the simplified disclosure has been introduced in June 22. So that is a change for non-for-profit. The KMP, Key Management Personnel and Related Disclosure, is an education journey which is applicable this year for the NFP space who are doing special purpose financial reporting. Revenue recognition is the third, which still remains a key challenge in the for-profit. So there's, as you know, to meet some of the challenge of the AASB 1058, you need to have, sufficiently specific criteria to recognize a revenue, and it can be quite confusing. So, for example, a for-profit company will apply AASB 120 for a grant, while a non-for-profit will apply AASB 1058 for the same grant. So depending on what sector you're sitting, you will apply different accounting standards. And for example, even in the same industry, like in aged care, there will be 2 different accounting bases, whether you are a for-profit aged care or whether you are a non-for-profit aged care. So for example, the for-profit will apply the AASB 120 for the grant, and they will recognize receivable when a reasonable assurance is attained to get that receivable, while the non-for-profit, using this AASB 1058, because it is linked to another accounting standard, AASB 9, to recognize an asset, the test is virtually certain. So the test is a lot higher for the non-for-profit to achieve, to book that receivable. So it is quite, challenging for non-for-profit on the revenue in particular. The fourth item I just wanted to mention is consolidation. There is guidance, for the non-for-profit in AASB 10. And at the moment, it's not yet a big issue for those non-for-profit who prepare special purpose financial report, as they do not have to consolidate, but this is an ongoing issue since when the special purpose report is removed, they will be required to consolidate. So it's an ongoing consideration. And finally, the last point I wanted to draw is fair value measurement. It is a particular issue when it comes non-for-profit. And I know there's a AASB project, in the space for NFP public sector space. There are probably a couple of things I wanted to highlight, 2 issues. Fair value measurement is difficult in the sector, as some assets are challenging to measure because either they have restriction due to their restriction for their use, or they are very specialized in nature. So for example, I can think of an aged care or disability facility where to get a fair value of those facilities is a challenge for the valuers. So but the principle of AASB 13 are based on market participant buying and selling assets. But I think further guidance appears to be needed to assist the non-for-profit to apply those fair value measurement principles. So I guess just to conclude generally, for this reporting season in June, what I see is those large non-for-profit who are preparing general purpose financial report. Those who are using reduced disclosure regime, there's not a lot of change with the simplified disclosure, not a lot of change. But those who have been probably the most impacted is this non-for-profit using special purpose financial report. There's the new requirement of the disclosure of KMP for those entities to meet the ACNC threshold of large, which is $3 million of revenue as a large. And a wave of change is coming. And of course, education and early preparation will be key. So what I've observed is those type of are very, very useful for our clients. And, obviously they need to check with their advisor regularly.
Okay, thank you very much, Isabel, for those reflections from a practitioner's perspective. We're now to the question and answer session, and thank you for those people. There's been a few questions already posted. So anyone else who has some questions, please feel free to put them in the Q&A. For the question and answer session, we also have Marina Michaelides from the AASB and Maggie Mann who are joining us. So the first question I'd like to ask relates to the issue of outreach and how the AASB gets input from users. So I'll hand over to Maggie first to answer that, and then to David.
Thanks, Ralph. So I will talk about the publication of the discussion paper and outreach plans very soon, but I think to address that question, we are going to be hosting a number of outreach events and to try to promote the discussion paper when it is published, to try and encourage stakeholders to provide us comments. We have looked at a number of ways to try to encourage that outreach as well by also developing snapshot document, which is a 12-page document, which is a very succinct version of the discussion paper, hopefully to try to get engagement from those that are not particularly well, or has the resources to actually read the discussion paper, and an online survey. So there's a number of ways that we are trying to think about to encourage stakeholders to provide us feedback. We definitely need, obviously, help from everyone that's on the panel to promote the discussion paper, to try to encourage outreach from everyone we can get. And obviously, David, from your research, we're definitely going to be reaching out to you to try to get engagement from users as well. But I might stop there. And David, I'm sure you've got something to say as well.
I need to add, I think it's never been more exciting. I don't know what that says about me, but never been more exciting in terms of opportunity for change, and the AASB is very positive, and I think ecumenical view of, well, what does the whole world look like and how can we transform things to be more effective? So I think that's the first thing I'd say. The second thing is that I believe this is also part of the broad financial literacy issue. The traditional opportunities for people to report into the AASB in terms of their perspectives, I think are stultified by people that don't think they have anything to contribute because they're not financially literate or financially confident, perhaps might be a better way to put it. So I think that is part of the longer term process, as well as how do we get people more confident that their opinions are important to people like the AASB in order to get outcomes that make sense.
And I might just add, sorry, Ralph, before I finishing the question. So we do, for this discussion paper, it is going to be a 6 months consultation, because we know that it's going to be harder to reach out to the interested stakeholders. And this is really just the first step, being it's a consultation only. We know it's going to be a long process. So this isn't the end of, the whole framework. So yeah, that's all. Thanks.
Thank you. And other panel members, if you ever want to contribute anything, please jump in. Aware of the time. So there's a question specifically about narrative reporting, And the question was directed at Mel. So if narrative is required, or if it's as important as you suggest, why doesn't Parliament require this?
Yeah, it's a good question, and it might not be in a formal. It might not be in a formal way. One of the great things about, I guess, change and the ability for charities to drive their own agenda is that there's nothing stopping charities from providing information, some narrative to support decisions that have been made, the state of their financial position, their financial performance. But it's a good question from Kerry, and I don't really have an answer. I can't speak for why Parliament haven't mandated that. That's a decision for Parliament. We only implement the laws that we are given, but I certainly think there is value in it, in whatever form that might look like, and it might not be in a formal sense. There are different ways that organisations can communicate that sort of information. One of the ways that they can do that is through the annual information statement that registered charities need to complete. I know that's not a suitable answer for organisations that don't report to the ACNC, but yeah, it's something worth considering whether there is a need for something formal or not.
Are there any other panel members who would like to contribute to that? Okay.
I need to say, Ralph, I think there's great difficulty in a lot of particularly human services areas where outcomes, achievement of outcomes is a process that extends beyond one financial period. And so marrying up our traditional perspective of annual financial reporting to our human services outcomes, say in aged care, disability and so on, I think can be quite a challenge as well. And we need to think about how the picture is painted in terms of outcomes more broadly.
Ralph, I just make a comment if I might as well. I think certainly my observation is fairly historically governments have focused on financial reporting accountability through sort of acquittal of expenditure of funds in accordance with the budget, etc., rather than looking, and they do gather some performance information. I am a little bit skeptical about a shift from, say, output reporting to outcomes. I think outcomes are very slippery things for a lot of people to be able to report against, much harder than, for example, just reporting about what the outputs are that they've been able to achieve. How they then contribute to broader sort of outcomes and impacts is I'm not sure it's sort of sufficiently developed yet.
I suppose that comment leads nicely into the first question about service performance reporting, which is all about sort of measuring your performance and outcomes. Are there any comments that panel members would like to make on? And it is an topical issue. No one's willing to bite on service performance reporting and if it's a good thing or not. Ellie?
Yeah, I'm happy to make a comment on that. I mean, I think as I kind of mentioned earlier, I think the important thing, or an important thing to reflect on, is where is that information going to be provided? And apart, you know, in addition to obviously the larger questions of what information would be selected and who is that information useful for? And certainly if we're talking about information that's going to be added to the financial report, one would assume that as reports are currently prepared, that information is then targeted mostly at funders and regulators who arguably, and I think as Ben was pointing out there, are probably already requesting the information that they need. So if we're talking about how do you mandate information that is of interest to a much wider public audience, I think you get into, you know, very, very complicated areas of trying to determine exactly what those users are and to reflect the diversity of those users. And in the research that I've been doing, for example, with Aboriginal and Torres Strait Islander corporations, really the tone and the content of their narrative disclosures is really quite different from non-Indigenous corporations, in that they've got a very specific focus on the culture, of their organisation and the continuity of the cultural practices and norms of their particular kind of group or organisation. And I think it is going to become very, very difficult to find a kind of one-size-fits-all form of reporting that is going to be able to reflect the great diversity and important diversity of the users of these reports.
David, did I see your hand go up before, or was that?
I only very quickly to say this, I think feeds into my comments around the government not-for-profit nexus as well, because we have a tendency to look at not-for-profits and charities' performance as if it operates or is it achieved in isolation of the policy framework and the other frameworks, funding frameworks and so on. And I think that's an incredibly dangerous position for the sector to be put in. And there's many examples. NDIS is probably the most prominent one today, though.
Okay. Thank you, thank you, David. And there's a lot of questions in the Q&A. We're running out of time. I'll just ask one very specific one quickly, and this is probably targeted at Isabel. Are there a large number of NFP private sector entities measuring non-financial assets at fair value? So are you aware of specific numbers, or if the majority would still be using historical cost?
So most of the non-for-profit I know handle historical cost, particularly in relation to to plant and building. We had seen earlier on, I have seen some electing a fair value measurement, which has a level of cost, a level of complexity and a level of cost, because you obviously, if you do decide that your net asset will be much bigger, of course, you're externalizing your unrealized gain on those for profit and for PP&E, for plant and equipment, but it requires a valuer to come very regularly to assess. But I have seen that. What the non-for-profit do not escape and are required to do, though, is their investment, their portfolio of investment, managed funds, equities. They must comply with a fair value measurement. And there, it has a quite level of complexity, because most of the non-for-profit have seen elect fair value to profit through profit and loss, whereby realized and unrealized go through the profit and loss. Some, however, to minimize the impact of the market, have elected to have some of their portfolio through equity, which does create a level of complexity for their finance, as they need to split their portfolio for some mandated, such as managed fund. There's pretty much no choice but to do fair value P&L, but there is a choice for the equity, for the share. So yes, non-for-profit are required to do fair value for some parts of their valuation, where there is an option for items such as property, plant and equipment.
Okay, thank you very much. And apologies to those people who I haven't been able to get to your questions. Some are specifically tailored at certain panel members, and I'd ask the panel members please to look at those questions and maybe respond offline to the people asking them. I'd now like to hand over to Maggie Mann to conclude and to discuss about the upcoming AASB discussion paper.
Thanks, Ralph. So I think everyone's kind of hinted. So we're developing a discussion paper for quite a while now to develop a further reporting tier, being Tier 3 general purpose financial statements. And the primary objective is to provide simplified financial reporting requirements that meets the needs of financial statement users of smaller entities. At the same time, we are going to be consulting on the removal of the ability to prepare special purpose financial statements for not-for-profit entities that are required to prepare financial statements in accordance with Australian accounting standards. The AASB is not going to include any reporting thresholds in the Australian accounting standards. However, the proposals were developed based on the common transactions of not-for-profit private sector entities with revenue between $500,000 to $3 million. Now, these proposals are expected to provide simpler accounting while improving comparability and quality of financial reporting, reducing costs. And as David's presentation pointed out, that cost versus benefit consideration was really big in how we developed the proposals that are proportionate to smaller not-for-profit private sector entities. And just to give very quickly some of the sort of simplified accounting requirements that's being proposed, we are going to develop a new income recognition model of allowing for deferral of income where the resources are required to be used in a particular way, lease assets to remain off balance sheet, so there's no requirement to recognize right of use asset, and there's going to be a accounting policy choice to preparing consolidated financial statements or separate financial statements with disclosures. We're going to be publishing the discussion paper by the end of this month, so it's very soon. It's going to be accompanied by a 12-page snapshot document, an online survey for those that can't provide us with a written submission, but obviously we encourage anyone to come talk to us, come meet us to provide feedback informally, formally. We are planning outreach events as well, virtual outreach from the month of October for the next 6 months. So each month we're going to have a virtual outreach event and also some limited in-person outreach in February next year. So really encourage anyone who's interested, talk to your clients, talk to everyone who wants to listen to us, to contribute to the discussion paper. And obviously we're trying to develop simplified accounting requirements that will be proportionate to smaller not-for-profit private sector entities. I know we're on 1 o'clock, so I know we need to close up, but I just also want to mention that we've already commenced some post-implementation review of a number of our domestic standards, including AASB 15 and 1058 and AASB 10. So look out for them and provide us feedback when the invitation to comment comes out as well. So that's all. Thank you.
Thanks, Maggie, and thanks, Rob, for chairing the session. It's a great session with a lot of insight and useful discussions for AASB and hopefully for everyone who attended today as well. And thanks for the support from CAANZ and CBA Australia for having the joint session today. One last thing I want to mention, we actually will start a project on service performance reporting in 2023. So if that's something you care a lot about, please come to talk to us. And thanks again and enjoy the rest of your day.
Thank you very much for the opportunity. Cheers.
Thank you, everyone.
Thanks, Al. Bye now.
Thank you.